All right. Good morning, everybody. Today is Wednesday, July 31st, and it is also Fed Day, which is going to be quite interesting because I believe the market expectation is like 100% for a 25 basis point rate cut. Some people are saying they might not cut. That's a long shot, I think. And other people are saying 50 basis point rate cut. So if I had to guess, I would go with the consensus 25 basis point rate cut. But it's going to be real interesting to hear Powell justify it. Um, PMI came out this morning and it was weaker than expected, so that could be some justification. But yeah, it's really a kind of a strange environment that we're in right now, and so today's the big day everybody's been waiting for, right? And it's going to be really interesting to see what the market reaction is when the announcement comes out, and then of course the subsequent press conference with Powell. So until then, everything's probably going to be really sort of dull. I can't imagine a lot of excitement pre FOMC, which is at 2 o'clock Eastern time. So you probably have noticed that the open trades list has been shrinking by leaps and bounds, and a lot of that is based on stocks getting closed ahead of earnings, right? So earnings season is kind of a really nice sort of what I would call a cleansing period. Yeah, sometimes market goes up and is really strong, and we end up with a whole lot of sort of accumulating open trades over time, and so they get closed ahead of earnings, and that's kind of nice. I mean, sometimes you get a stock like, okay, so these are on the homepage here. These are the three that are going to get closed ahead of earnings when we do the update tonight. So we use the opening price because that makes it easiest as far as tracking purposes, because everybody can basically get out sometime around the open. So take a look at these real quick. I'll start with RGEN, and sometimes closing a trade ahead of earnings is kind of, you hate to see one like this go, right? Because there's no telling. But thing of it is, stock like this that's had this huge run up can definitely have a negative earnings release. So what I like to do is I like to mark these on the chart here so I can remember when it got closed and why. Because sometimes I look back on the charts. I got one we'll look at in a minute where the trailing stop was like, quite a bit below the current price, and I was looking back at it and I was like, why did oh yeah, it got closed ahead of earnings. So yeah, this RGEN, this is one of the stocks that's had a lot of follow through. You can see where it triggered way back here, actually on 617. So it's been open for a month and a half, right? You can see the trailing stop going up. Pretty interesting. So anyway, today, it will get closed ahead of earnings that are coming out, I believe, after the bell tonight. Let me double check that. No, actually, earnings tomorrow morning before the market opens. So, what we do is if a stock is coming out in the morning with the earnings, it makes sense to close it the previous day. And so, to keep things consistent, we use the open price. So, this will get closed today at the open 94.90. And keep in mind when you look at the closed trades that even though the trailing stops down here at 88.65 as of last night, basically in the T stop column, it will have the open price. It'll have the price that it got closed at, and so it gets adjusted to compensate for earnings. So there you go. That's a pretty nice stock there. Really nice move too. This is one of the ones that basically it never traded back down through the trigger, and so setting a limit at the trigger price wouldn't have filled you. And so this is a great example of why you don't sweat the small stuff on some of these trades, because if they get the follow through, they get the follow through, right? And so, if I'm not mistaken, this particular stock, as of last night, was 25%, roughly 25% over the trigger. So that's a very, very significant move. Let's see, SKYW. Take a look at that one. Yeah, this is kind of and this is one of the weird things about earnings season is, sometimes one of the pending trades will actually trigger, and then earnings are coming out, a week later. Generally speaking, if it's only a few days, like if earnings are coming out within the next few days, then we'll ditch it. If it happens to trigger and then I see that earnings are coming out. So, but in this case, there was a little bit of time left ahead of earnings, and so anyway, yeah, this is kind of an unusual one, but it looks pretty good, to tell you the truth. It looks like a decent little, so it's going to be kind of a small move there. And this one was just starting to get going, but anyway, it's going to get closed ahead of earnings. And the final one was PPC, which is also looking pretty good here. So this PPC, let's see, it triggered back here towards the beginning of July. Actually, it was this day, July 1st. Pushed up through that, and kind of chopped around, but it has hit the target here. And so here's the current stop, which, interestingly enough, I've only marked a couple of the stops on here. I marked the initial one and the one where it basically got to break even, because I thought it was interesting that the stop, usually you'll see them like a little bit below break even, a little bit above it, and this one was kind of unusual because it was right smack at the exact same price as the trigger price. And so you can see it's pushed up here. So I'll mark this one closed ahead of earnings. I guess I should do that now so I don't forget. But anyway, earnings season is just a really good sort of cleansing period, right? And there's some more that are going to get closed. But interestingly enough, there's also some stocks that have triggered here in the past couple of days. We're getting one here, two there, one or two here and there. And quite frankly, the way that the open trades are right now, with a real nice sort of short list here, I'm kind of pleased that there's not a whole ton of open trades ahead of the Fed here, right? Because I mean that's it. So we're down to 14, and you can see some of these, the ones that have the biggest moves right here have been open for a while. It's kind of interesting the way that works. And so obviously the ones that have just triggered the most recently are going to, a lot of times have not moved a whole lot, right? And so the way that the system works, as you guys that have been here for a while know, is that it's kind of like the system automatically implements the old Wall Street saying, cut your losers quickly and let your winners run. And so you can see that the couple of top gainers right now have been running for a while, and so they just kind of kept going. And by virtue of that, then they've stayed as open trades. So there's some really interesting examples in here, and once we get through earnings season here, and depending on what the market does, we should start to see like kind of a whole new cycle begin, right? So this list is gonna get cut down significantly, and the nice thing about this is that the trailing stop, the T stop on most of these is above the break even point. So let's see, there was a couple of them I wanted to look at that I was looking at these last night, kind of good examples. CCK here. Um, this one hadn't been opened real long, but this is kind of interesting. I think the example here is the one I was talking about last week, where if you get in at a higher price, right? So, here's the trigger price, and it closed sort of significantly over the trigger. And so, if you were waiting till the next morning to buy, basically you could just take that trigger and just adjust it up by the distance between the trigger and your entry there. And so, your stop would have been up here, or I'm sorry, your target would have been up here. And so you still want to follow the system trailing stops. I wouldn't fool with those. But as far as the target goes, and so that gives you a little, kind of compensates a little bit, because I know in a lot of people's minds they think that they want to get in right at the trigger price, but basically jumping the gun on the trigger is typically not a good idea. I mean, this is a pretty good setup here, right? And so if you were watching it intraday, and I know in the documentation Jeffrey has, it says that if you're watching it intraday towards the end of the day, it's going to trigger. You can jump in there. The only issue would be is if for some reason it gapped way down the next day and didn't trade at the trigger price, it would get removed from the open trades. So, but I've only seen that happen a couple of times, and so we got like I think we got somewhere around like 500 closed trades. So between all those and following the charts and that, I've seen just about every single sort of thing that can happen, right? And so the idea is that over a series of trades, over a number of trades, 20 or whatever, it's all going to kind of even out. And so don't sweat the small stuff. The stocks that tend to actually go on and make these big moves like this, doesn't really matter if you get in a little bit over the trigger. So let's see, MRVL looks like it's hitting the stop here. This is kind of an interesting situation, because you can see that there's basically like two trades in a row on this, right? Back over here at the beginning of June, this thing triggered and ran up and then kind of waffled around, and amazingly enough, it like poked at the target right at that low right there, and then turned right back around and then triggered in again at a higher price, right? And and so this latest trigger was right here at I can hardly see that, 2435. There we go, 2435, which would have been on this day. And so there you go, ran up to the target. I don't have all the trailing stops on here, but they would have basically come all the way up, and then so there you go. Now I'm not sure. This one looks like, yeah, I never did mark the P stop on here. So there's only it's a little time consuming to mark all this stuff on the chart. 2678 was the P stop, and so that would have been back here. Let's see, 2680. So the parabolic stop would have been back over there, sort of right below that low. But interestingly enough, the T stop made it all the way up there too, and so really doesn't make any difference, right? It doesn't make a whole lot of difference. 2678. P stop right there. It's kind of hard to. So if you're using the P stop, that would have taken it out yesterday. Taken you out yesterday. If you're using the T stop, then you're out here today, right? And so it's actually this is a pretty decent example of why you don't always necessarily just want to bail out of the whole position at the target, although that's completely viable. I mean, if you're looking for a quick move, quick trade or whatever, and you like to get in and out, you're real super active, you can use an all or none trading strategy, right? You get in at the trigger or somewhere around the trigger, and you just bail out at the target, and then you look for the next one. However, if you're more patient, or if you're trading, a large enough position or bigger size, I mean, the real money is made when you catch the runners, as they're called. And so this is the first target is basically just high probability target based on the month, based on the ATR of the stock. But most charting programs and most people that talk about ATR use a 14-day ATR. And what we do is we use a monthly ATR. So it gives you more data, and Jeffrey has a really interesting way of doing it. He takes like a month's worth of data and then he drops the largest and the smallest number off of that, right? And then so we get a really pretty good our own sort of computed ATR, which includes more data, and so it tends to be a little bit more reliable. All right, let's see. We looked at RGEN. Um, this closed ahead of earnings right at that gap up this morning. Oh, I know what I wanted to look at was I was watching. This is an interesting one. Look at this SEDG. This thing triggered. What it triggered this day? Yeah, triggered like right back here, back over here, I believe that day. And so you can see how kind of looked like the initial stop was kind of wide. It was below the low of the pattern. If you zoom out on this, it kind of makes sense. But anyway, it's sort of just meandered sideways, but the trailing stop continued to ratchet up. And so you'll see that a lot of times. You'll see that the initial stop turn into, a trailing stop, sometimes the very following day or a couple of days later. So they move up really quick. So anyway, if you ever look at one and you say, hey, that the initial stop just seems so far away, don't even don't even worry about that because it's going to get moved up quickly, even if the price doesn't really go anywhere, right? So that's just the reason we do that is on the outside chance that like right away the price starts to drop. I mean, we want to give it enough wiggle room so we don't get knocked out. And again, it's all based on the ATR of the stock. And you zoom out on this pattern, you can see that that initial stop there kind of made sense, sort of right below the little pivot there, the low of this pattern. So anyway, what's wild about this one is that this morning, I mean, huge gap up this morning, pushed higher, pushed through the target there. Let's see, the high was 67.19, and then look at that reversal. Pretty outrageous. So it almost looks like an earnings move, but these guys are coming out on 8/6 is the earnings. And so that's not an earnings move. That's typically what you see with like a news type move. And we've talked a lot of times on this show, and some of the times we'll have Jeffrey on, we talk about, hey, you get a big gap up, especially something like this, especially a gap up that pushes up to the target. This would have actually, well, I shouldn't say that. I was about to say this would actually maybe not have been a bad idea to pull the whole thing off the target. So that's a little subjective because sometimes you'll get a move like that and it'll push and just keep going, right? So, but anyway, this is a pretty good example of, and this doesn't happen very often. I mean, this is highly sort of unusual. So it's going to be interesting to see what happens with this at the end of the day. Now, of course, today's an odd sort of day, being Fed day and everything, but this is the kind of crazy price action that you can see. You can see some other spots on the chart where well, look at this day. Here's a huge gap up and a push, right? But then it faded back down. So yeah, this is very. It looks really crazy on my 60-minute chart, but anyway, it is what it is. We don't have a humongous amount of stocks to actually look at here. Here's one that just triggered a few days ago, and look at this, 51. It's trading, basically like back around the trigger price. I was looking at this last night because it's a relatively tame stock as far as the ATR goes. But what's kind of interesting about it is that like this sell down and that rally pretty darn significant, right? This little dip here, that last rally was pretty significant too, percentage wise. And so, stocks got CBS got a nice little uptrend going here, and just took a dip, rallying back. And there's lots of up and downs on these rallies, and so market's acting a little bit weak here this morning, but no huge big deal. So some of these you know they tend to hang around the trigger area for a while before they take off. So, anyways, it's looking pretty good. This is kind of, I believe this thing only moves like the monthly ATR in this like 1.5% or something. So, not too exciting. Let's look at a couple of other ones here. Let's see. I wanted to. Oh yeah, let's look at see what Vonage looks like here. Yeah, Vonage is one that is basically triggering in today. Earnings are coming out on 8/6. So this one's not going to be open for very long. Let me mark that on here just so I have it. And the interesting thing about these earnings dates is that sometimes they're fluid. I use Thinkorswim. I found that is like my actual broker, right? TD Ameritrade. I found that's about the most reliable place to find out when the earnings dates are, is your broker. But the funny thing about that is that sometimes they change. If you look up earnings dates 2 weeks in advance, trust me, they're going to change. And so basically, I'm kind of keeping track of them just week by week, right? So all in all, this is a pretty constructive chart here, and it's not gonna take much for it to go up. But something you might want to keep in mind is that this one doesn't have a lot of time to really work, and so there's a pretty good chance. Look how it's like up, down, up, down, up, down. That's kind of one of those things where the following day tends to cover up a large majority of the previous day, right? And so it's kind of an interesting pattern there. But so this one, hey, it could go either way. There's today, and then there's one, two, three, four more trading days. Under those circumstances, if you want to look that up and see that yourself, then you could just pass it up. You could try it, or you could just pass it up. I had someone ask me yesterday. We got into the whole thing about how to pick which stocks to trade, and we talked about this before. And there's some pretty good guidelines in the documentation. But yeah, basically, you can use several things as far as figuring out which ones to trade, which ones to not trade, or maybe I should say pass up, right? Because there's going to be plenty cycling through the system, right? I mean, it wasn't that long ago there was a humongous list of open trades, and so don't fear. There's going to be plenty of stocks that cycle through the system, so you do kind of want to be a little bit selective. And the main thing that you can do is if you like trading lower price stocks, stick with the lower price ones. If you trade stocks that are higher priced, kind of brand name stocks, right? Then you can stick with those. And then of course you can, I like to look at the charts. But the funny thing is I noticed this last night. There was a section in the documentation that says that sometimes you'll have like, a profitable company, with a really nice looking chart, and then you'll have some money losing company where the chart looks kind of erratic, and it's the one that looks all sloppy that actually does really well. And so it's kind of it becomes a little bit difficult, but I've always liked to use the chart patterns themselves to figure out which ones I actually prefer. And so it is what it is, but you don't really have to overthink it. And the other thing is Personally, I like stocks that can actually move, that have a decent ATR, and so the ones that tend to be like, like a two, anywhere around two, like the CBS, I think, and I forget what Nike was. Nike just triggered, and it doesn't have a huge ATR, but let's see. So Nike just barely triggered right here, right here this day, and I think let's see, last 8768. Yeah, so it triggered here, and then so yeah, this is kind of an interesting one because yesterday everything gapped down, right? The market gapped down, and a lot of stocks did, and so in a situation like this, you would not, when it's trading below the trigger price, you would not have wanted to jump into it at the open, right? And so this is one of those, and this is an unusual case too, but you basically would have wanted for it to wait until it actually pushed up through the trigger and then gotten in like right around, right at the trigger price as it pushed up through it. And so another fairly decent pattern here. Now this is that was some strange price action yesterday, and so that, and the trailing stop too has already moved up just a little bit, but it did move up a little bit, and so it'll be interesting to see what happens with Nike here. Kind of a high price stock. Now let's take a look. Take a look around. Here's one that triggered recently too. This one's still this one's still kind of hanging right around the trigger price, right? So came down, poked at it today. Stop's already moved up on this too. Probably it'll probably slide up again today. There's the target up there. So yeah, let's look at a couple of. So there's not a whole lot on the open trades here to really do much with. So which is good. And a couple of them, actually three of them are going to close today. Let's look at a couple of the biggies, like the big brand name ones that have recently closed here. Roku was kind of an interesting one. A lot going on with Roku here. This is one where I did plot most of the stops. There's a parabolic stop up there, but this day got it. And so, it came up, went through the target. This is another example of one that your target would have, if you got in here, you would have raised your target up a little bit to compensate for that, but no big deal. And then, of course, the parabolic stop. Parabolic stop's not a bad place to just close out the rest of it, lock it in. The reason that we don't do that for the system is that once those parabolic stops kick in, um, I mean, you're basically like, it's very rare that they don't get tagged within a couple of days. So most of them that I've seen, the parabolic stops get tagged, and which is great, if you're super active, real short-term trader. But some of these stocks, like even this Roku here, some people like these things, sort of longer term or whatever, and so we wait until we trailing stop is what actually closes the trade, takes you out. So let's look at Twilio is another one here too. Twilio, same sort of thing. This is a little weird because it had a nice run. I mean, it had a really nice run, but it never quite made it up to that target. Just never didn't quite get up there. And then long range day. So some of these tech stocks have gotten hit here. Here's one for you, AMD, right? Look at, and here's a great example of why we close these things ahead of earnings. Now, it just so happens that AMD caught the trailing stop here on Monday, right? You can see the trigger back here and the entry, the progression of the trailing stops. It hit the target relatively quickly. So that was kind of nice. I mean, that was a nice run up there. And then this parabolic stop was over here, but really nice progression of raising the T stop and then tagged it on Monday. If it hadn't tagged it on Monday, it would have gotten closed yesterday at the open anyway. We'd have closed the thing, just basically right there. and you can see exactly why. I mean, essentially, it's like you never want to have a really good gain in a stock and then end up like this. I mean, imagine the people, imagine people that bought this thing somewhere, 30 and a half, 31 bucks or whatever, and rode it for this, decent profit here, right? Rode it for all this. And then they're sitting here this morning and it's all the way back down to what they paid for it. I think I did a blog post, or maybe I'm working on a blog post about that, but I think it was in the last one that I did. So I like to mention that a lot because a lot of this is psychological, right? And so that's why having a strategy and kind of having a system to follow and everything calculated. So the more mechanical that you make your trading, I think the better off that you're going to be, because what happens is, you start introducing emotions into it. You start getting greedy, and you start reading the news and doing different things, and so you convince yourself that, hey, I'm gonna hold it over earnings, and then you're right back to where you started instead of having locked in some profits. So amazingly enough, it ended up with the trailing stop like at the exact same level that the target was at over here. And so that's basically, the whole position would have gotten closed at 33, whether you were selling half at the trailing stop or whether you were just following along with the I'm sorry, whether you sold half at the target or whether you were just following along with the trailing stop. So, but anyway, hey, great example of why holding over earnings is not only a crapshoot, but you're risking a lot. There's no edge. There's really no edge to holding over earnings when you're doing short-term trading. Now, if you looked at if you had been in this stock for weeks or months or years or whatever, right? I mean, this thing's been all over the map, and so depending on what you're actually doing, if you're investing in a stock for the long term, or maybe you've been holding this stock for a long time, I've had lots of entries and exits and technical patterns marked up on this stock over the years, but yeah, this one was kind of interesting. This big pattern here. But regardless of any of that, for the purposes of what we're doing now, short term, perfect example why you don't hold over earnings. So CVI. CVI was this was pretty interesting because it got closed ahead of earnings on the open this day, right? Like right here. This day, 724. This was another really nice. This was one of the most persistent uptrends that I've seen in a long time, to be honest with you. This was pretty amazing because there was not a whole lot of volatility and hardly any dips along the way. I mean, typically you see like a run up, you see a little pullback, consolidation, whatever. Once this thing broke higher, it just it hit the target and then just literally kept going at like a 45-degree angle. And so amazingly enough, I don't even have that marked right because um, it got closed ahead of earnings, and then look what it did the following day. Just crazy, crazy long range day down that probably would have cleared a lot of stops, and then actually moved higher, right? And so you see this sort of, it's almost like random. I don't call it random, but it's real. After earnings come out, the next day, even the next couple of days, you get this kind of price action that there's just no real rhyme or reason to it, and so you have no edge, you have no risk control, no risk management. So it's all about managing risk, right? So you know what your risk is going in, and then as the price moves and as you're following up, I mean, everything's kind of calculated, computed. You know what your risk is, and earnings is a binary event, right? So, anyways, this would have been closed at 53.92, or got closed at 53.92 right there, before the earnings came out, and so it's just been sort of crazy ever since. and that's a good one. Same with Facebook, right? Facebook got closed ahead of earnings, and it was sort of a weird one because it happened on this. I believe it happened on this gap down day there. Let me see. Facebook. Looking for the T stop 195.50. Yeah, so this was kind of in the open there. Well, let's see, 195.50. What am I looking at here? Anyway, somewhere over here, but yeah, same sort of thing, right? You can see that it got closed ahead of earnings, and then this day it just, I guess when the earnings came out, yeah, that's right, it gapped up significantly, and then that sort of marked the short-term top, and you can see it's coming back down here. So kind of weird, but it is what it is, and so holding over earnings a lot of times is just detrimental. So just going through some of the stocks on the closed trades table here. Sometimes it works in your favor. Here's one that got closed. CRSP got closed ahead of earnings on that gap up, which was kind of nice. So this was a pretty nice looking little little sort of uptrend it had going here. And so you can see a lot of times when these stocks gap up on earnings, they do tend to fade, and sometimes that actually marks the top of the cycle. And so, and then there'll be other times where you get like a huge gap down and then it pushes higher, right? Every now and then you get like, and that's probably not an earnings gap. It could be, but every now and then you'll get an earnings gap, and that like marks, this is probably not a great example, but that'll mark like the start of an uptrend, right? So you just never know. So this is a biotech stock, so it tends to move more on news, but so I mean it's a good example of how everything works. And if you look through the closed trades, you'll see that a lot of them are hitting the targets, right? I mean that's basically what we want to see. So here's a great example of one that had a nice rally. You remember back when this triggered, this was one that I actually sort of talked about on the show that I sort of thought the chart was constructive. I like the look of it basically. Main reason was is that the initial stop was like right down here, just below the low of the pattern and in that gap area. And so I figured, hey, if this is going to make a move away because it had a lot of consolidation, then it was not going to trade back into that gap. And so kind of waffled around for a few days, ran up, hit the target, pulled back the stops. The stops on this were pretty amazing because they managed, even with this volatility, managed to keep it in, all the way past the target. Um, and so, it poked the target and then had a pretty significant pullback, right? I guess. I mean, it was not a high volatility stock. So anyway, but you can see what happened. You can see why we like to lock in the profits and sell half at the target, sell the other half at the P stop and or the trailing stop. And so, like I said, that's going to depend on how much time you have to spend, on how much you want to micromanage them. And it's sort of a case by case basis too, right? The P stop doesn't kick in on every single stock, but sometimes well, that CVI is a pretty good example of the CVI is a good example of how like that P stop, parabolic stop, can kick in and then ratchet up and not get hit. Typically, it gets hit within a couple of days, but if the stock's on a humongous tear, this one would have taken you out here up here at 53. And so these other parabolic stops, which are typically below, somewhere below the low of the previous day, is where they will show up. So anyway, this is a pretty good example of that. So hard to tell what the market is going to do from here. It really is. I mean, uh, it's just such a, see right now, well, we're getting a little fade down. I mean, I look over at the S&P, it's at 3010. It looks like it's been selling off today, selling off, but I mean, it's only down a few points here. So, ahead of the Fed. Let's take a quick look at the S&P. Today is Fed day. So, I did have my vertical line on this chart, but I took it off. Most interesting thing here is, well, there's a couple of interesting things. Here's a Fed day right here. Okay, that was 9 September 926, right? That was the last hike. Fed hiked rates on 926. For a few days the market kind of didn't really do much, and then all of a sudden that's when, and that was a 20% sell off, right? I mean, right at 20 if you take the high and the low. So that Fed hike there, and that's the one that I guess Trump is calling a mistake, right? And so, today the Fed's going to take back that hike. This is a Fed day where they did nothing, right? This was the May Fed meeting. I didn't mark the July one on here. I'm sorry, I didn't mark the June Fed meeting on here, but I've kind of marked the ones that I thought were the two important inflection points. And lo and behold, today's going to be, might as well mark it right there. What's interesting about this chart is this overhead resistance line. And I'm sure that, if you've been looking at people marking up charts, you've probably been seeing this for a while, but it's almost uncanny the way that this overhead resistance has really sort of held the price back. I mean, if I zoom in on this, and a trend line like a couple of pixels here and there, the further out you extend a trend line, like if I go to the weekly, it's hard to tell. I mean, it's hard to tell if you got it precise, right? Like if I dragged it up, just a couple of pixels so that it was touching that high, then it could line up perfectly with the high on the daily. But good enough for government work. If you drew it with the crayon, it's still valid. And so today's probably today and let's see, today's Wednesday. So between today and the next couple of days, that weekly candle is likely to, one of two things going to happen, right? The market has a positive reaction to the Fed and rallies up and breaks over this trend line, or, and here's the other thing is, like, I've seen so many instances of where you could have this exact same pattern on a chart, and it's broken over that and just never looked back, right? So, I mean, it is a valid technical area of resistance, right? But that doesn't necessarily mean it's going to get turned back there. So, it's all about, and I would say, today's going to be sort of weird because at 2 o'clock the Fed announcement comes out. So you get that initial sort of reaction by the algos. And then there's the press conference, and that'll add a little more action to it, right? When they get to ask questions and Powell can explain why he did what he did and, give some forward guidance, right? And I think that's probably going to be the most important thing, is the forward guidance. So, and I've heard so many interesting theories on, on what they're going to do, and why, and how they're going to characterize it. So I've been waiting for today since the June Fed meeting, because, man, this is going to be the important one. And of course, Trump just publicly criticizing the Fed sort of on a daily basis. I don't know that that's really helping things, but so it's an interesting sort of scenario. But anyway, so there you go. Perfect overhead resistance on the S&P. We're right at it. Got a little sort of an inside weekly candle here, and so it's going to be very interesting to see what happens here, right? One thing to keep in mind is that, these pivotal Fed meetings, there was one, happened right before a big sell off. And then, the May Fed meeting, literally, you got a gap up that morning, and then you got a 7% correction, I guess you would call it, 7% pullback, right? And so here we are, poked right up at overhead resistance. So anything can happen. It's been one heck of a run up off of that sell off though. So there's a bunch of there's support everywhere here. There's a big level of support there. You know, big levels of support. There's a gap right there. I guess I don't want to mark this chart up, but there's a gap right there. And there's support here and support here. So I mean, basically support all the way down. So and a little tight trading range here today. I don't believe that we've seen a 1% move in the S&P for a while, right? I mean, like actual close to close, it's been kind of dull. So, and August is typically what I call the summer doldrums, the dog days of summer. So, but hey, you never know. And quite frankly, I don't understand that because somewhere around 70-80% of trading is done by computers these days. And back in the old days when people traded stocks and they traded in fractions and all that, people would take summer vacations, they'd go away for, weeks or, a month or whatever, take a big vacation and put the junior guys in charge of the desk and tell them not to do anything really, and so the volume would sort of trickle off and this and that. And so it's in this day and age of computerized trading, and it's institutions that move the market. As much as CNBC likes to pretend that mom and pop investor that move the markets, it's obviously it's institutions. And so you wonder why the trading is so dull in the summertime, because it's not like it's dull because people are taking vacation. Maybe it is. I don't know. Maybe that's how the institutions still work, right? The top guys screw around in the summer and take vacations, and so I don't know. I can't really explain it, but anyway, not a whole lot to say about the market ahead of the Fed. Look at the IWM here. IWM had an interestingly strong day yesterday. It basically like engulfed 4 days. So IWM has been sort of the underperforming index, right? And the small caps have just not really been doing a whole lot. I mean, there's the high on the small caps. Interestingly enough, that trend line, I know it's been a long time since I talked about that trend line, goes back 9 years, and so that's an instance of where that sort of overhead resistance did come into play in a major way. So absolutely amazing. Every time I look at this, I'll show you the monthly chart real quick. Um, oh, I must have moved it. Oh, I know what it is. Hang on a sec. I knew I was gonna I set this to a log scale. There we go. I screwed up my 9 year trend line by I was switching from linear to log scale, but there you go. All the way back to 2010 is where this trend line starts, basically back around the lows, and then like I just pointed out, it came in right at the highs there, and we haven't seen that high since. But you can see the Russell is like sort of in this megaphone pattern, and it's been a huge run at the beginning of the year, and now it's just sort of stuck here. So that's kind of an unusual and interesting divergence in the overall market. So we'll have to see what happens with that. Real quick, look at the Dow here. Dow's kind of hanging around here. It's got this little consolidation pattern, right? And it's pretty tight. I mean, this is a pretty tight little sort of flag that it's got here, a little consolidation pattern. And so my guess is that we're probably going to be looking at a fairly significant move. Now it's hard to say that since we're heading right into probably August tends to be a weak month if I'm not mistaken. So August is like generally not seasonally speaking, I should say, is not really a strong month. So, and September is the worst month. So, but anyway, that little consolidation there, my guess is that there's going to be a break one way or the other that probably starts this week. I could be wrong. The market could just stay dull, but it just seems like this Fed meeting is going to be sort of a catalyst for something. It just sort of seems like it anyway. So, well, I think that was my cue to wrap up the show, and so everybody just kind of hang out, and maybe next week I can get Jeffrey on the show here. So everything's going along really good. The system has been, like I said, the system's been adjusting to market conditions. I mean, we're up here like against resistance at the high. We've had a couple of stocks here trigger lately, but not a whole lot, right? I mean, just a few new ones or whatever, and then basically, everything you're looking at here, the majority of these are still going to get closed based on earnings coming out, and so we're going to basically go through a whole nother cycle where there's hardly any open trades. They are all going to get closed, and then we start getting new ones at triggers. So keep your eye on the trailing stop on these open positions, and I will see you here next Wednesday. Thanks for tuning in.